We're going to stay with Google because the earnings that they reported certainly took a backseat to all these management changes. Earnings number, though, we should point out, stronger than consensus, $8.7 billion in earnings. But, of course, as we've been talking about, dwarfed by these management changes. For more on all of it, we bring in Piper Jaffray's Eugene Munster. He's with us now by phone from Minneapolis. Gene, thanks so much this morning. I feel like we should at least address the earnings, right? Higher than consensus for the fourth quarter for Google, right?
Absolutely, and they're really not getting the credit, as you said, because of the news about the CEO change, but up 29% year-over-year revenue growth. The consensus was up 22, and so for Google, this was a huge outperformance. Typically, it's been perceived as the next Microsoft and just hasn't really been growing, but it was a breakout quarter. A lot of that was driven by e-commerce and some of the paid clicks that those e-commerce companies were buying.
So, Gene, we do have to talk about the management changes. If you listen to especially Eric Schmidt, he says, look, this is the plan of the two co-founders and himself as well, that the decision was made all together. But maybe if Schmidt is not the right guy to lead right now, is Larry Page? We know he's great on innovation, but this is a huge company now. Do you need a management expert at the top?
I don't think you do, and I think if you look back over the history of Silicon Valley, is that founders typically do better with companies. They're typically better for their companies regardless of the size. Obviously, the best example of that is Steve Jobs coming back to Apple, Michael Dell, obviously Zuckerberg at Facebook, and I think that this is just the right step. You got to keep in mind that the engineers, this is an engineer-driven company, have a ton of respect for Larry, and I think that this is really going to infuse some passion back into the products of Google.
Even though Larry Page seems to be keeping a pretty low profile, according to some accounts these days.
Well, but that's, I think that's just the DNA of a scientist that he is, a computer scientist, and so I think that that's just part of really connecting with a lot of these engineers. And so I think the most important part is this really brings some passion back to the products, and I think that that's ultimately, as you guys were talking about before, what's needed to combat Facebook and others like Groupon.
Gene, what are they going to do? What is Google going to do to reverse its failure in the social space?
It's going to be tough. They're not going to come out with a product. They may try, but they're not going to be successful at having a social destination. So as Sergey was saying, is that it's more about integrating with other social products. And so it's a pretty vague strategy at this point, but I think that they're going to have ways that they're going to try to infuse search into social products, and that's going to be their strategy.
Gene, you know this company well. I know you said it's a vague comment. I heard you say that if you had to guess what comes next, what kind of partnership, what kind of acquisition might Google make?
I think the next big thing you're going to see is on this deal today is something competitive to Groupon. They talked a little bit about it last night, and I think that's probably going to be the big focus. This is a market that's come out of nowhere. It's going to be over $1 billion this year, and so that's probably going to be their focus. They can have a huge impact in that space, and I think that's where they're going to see some efforts.
Gene, thanks so much. Eugene Munster joining us there. He is a senior research analyst at Piper Jaffray.